Hey, it's me, Brad Hammond here, your Portland area real estate loving agent. Let's get on with the first quarter market update for 2025. Uh, let's talk about months in inventory. Right now, we're at 3 months of inventory, and it's been steadily going down all year. But as you compare it to the past 2 years, that's definitely on trend. It starts high in January where there's low transactions, and then it starts to go down and down as the spring and summer continues. And I foresee that still happening. I like this price heat map, but what I thought was interesting this time is that if you look in March, that 300 to $400,000 level isn't as popular as it was in previous years, and I think that's just because single family homes have become more expensive. Now you're getting into townhome and condo prices, and those just haven't been as popular as single family homes are, and so that's starting to get reflected. It's pushing people into that $400 to $700 price point, and that's kind of where they're sticking. So if you can have a property sell at that price point, you're probably going to do pretty well. Outside of those price points, things are a little bit more difficult. We can't talk about real estate without talking about interest rates, right? So as of right now, we're at about 6.83. Honestly, I'm seeing people get closer to like the 6.5%, assuming you've got good credit and maybe you're buying down the rate a little bit. But yeah, right around that 6.5 is kind of what I'm seeing a lot of my clients at. Closed sales, let's work backwards at closed sales and then we'll look at all the data leading up to it. So closed sales is right around where it has been the past couple of years for March. And I can kind of foresee that continuing. But let's look at pending sales, and that'll give us a good idea of what closed sales are going to come in at for April. So a pretty big hockey stick line up from February to March, more so than in previous years. So hopefully that means that there's going to be even more closings in April, and hopefully this kind of continues onto this trend. There's so many unknown factors, it's really kind of hard for me to predict. New listings is looking pretty good as well. Slightly more than last year. I think it's around 2% more, not too much more at all, but a good sign. We definitely need more listings out there. That's going to bring more buyers out there. That's what's going to balance the market. That's going to be the true key here, is getting new listings out there is going to fix a lot of the real estate issues that we're having. Active listings higher than in previous years. Slightly higher than in January and February, and that's because longer time on market. And yes, it's been going down. This is saying it's at right around 70 days. I see it either going in that first weekend or closer to that, like either 20-day or 40-day days on market. That's what I'm seeing a little bit more than this 70 days on market. Median sales price. This is kind of hard to see, and I'm sorry, but it's this like really big graph, and I try to shrink it down so it's a little bit easier for everybody to see. But basically, median sales price, I like to look at median. It's up 1.2 if we compare March of this year to March of last year. So a little bit of increase, better than a decrease, depending on which side of the coin you're on. But yeah, basically holding steady from last year to this year. I love looking at this affordability index because it is such a big indicator as to where we are in the Portland market, and how affordable homes are. So right now, if we look at that last bar graph, March of 2025, it is if a family is purchasing the median sales priced home at the kind of average interest rate and making the median family income, they can afford 90% of their mortgage. That's basically what this is saying. We want it at or above a 100 like it was back in 2021, 2022, and earlier. The biggest lever on that is going to be interest rates and getting those down. Once we can make that happen, then think this is going to kind of skyrocket up above 100% as well. But it's getting better. Last year, it was right around 82 or 85%. So things are definitely improving. Tariffs. Let's talk about tariffs. If you're anything like me, you're over all this tariff talks and how things are changing every week, every day, and by the hour. But when we look at construction materials, that's going to be, of course, like the steel and the wood and all the drywall, appliances, HVAC, all those things. what I'm hearing is about a new construction home is going to cost about $10,000 more just because of those tariffs. I think that if you were going to do a flip, it's probably going to be around the same, maybe 7,000. But you figure a lot of those high dollar items, the light fixtures, the appliances, the HVAC, that is what you're going to be replacing in a flip, and that's probably where the majority of those tariffs are going to be impacted. What is it going to do to the real estate market, though? That's a little bit harder to tell. It really depends on where the economy is going. Basically, if inflation is going up, then we're going to be seeing higher rates like we have the past couple of years. If we have recession concerns, that is what's going to bring the rates down. And so basically, if we see, keep an eye on the inflation data, and then that's going to raise the rates as the economy heats up. They want to kind of pump the brakes on the economy. And then when the economy slows down, and if and when we go into a recession, then they want to boost spending and try to lower those rates. There's pros and cons to both. Believe me, I've invested in both types of markets, and just because there's lower rates, there's other things on that. Money could be harder to borrow. You've got higher unemployment. People have less money to spend. They're just a little bit more fearful. So there's definitely pros and cons to both. Uh, but what is this going to do with the money in the stock market? I've heard so much of people pulling out of the stock market, and maybe they're just sitting on it in cash. So what are they going to do? Are they going to invest it in real estate? Are they going to go into a different asset class? That's kind of interesting. Also, if you've got these people that have, 6+ figures in the stock market, are they still willing to invest? Are they still willing to take what was a higher dollar amount, and if it's fallen by 25%, are they too scared? Do they feel like they don't have enough money to invest into real estate? There's so many pros and cons to what's going on there. It's really kind of hard to say, but I think that different people are going to be differently motivated by a stock market plunge. Keep an eye on the employment numbers as well. That's really going to be the canary in the coal mine. When we have unemployment numbers rising, that generally means growth and expansion, and then employment numbers contracting, that could mean a recession is right around the corner. And with these tariffs, I have no idea what to expect, to be honest. I think that if you do have liquidity, if you are able to purchase, there could be some good deals coming down the road. You have to keep an eye out for them, just like always. It's never the best time to invest. I've invested, on and off for oh my gosh, 20 years, I guess now. And when interest rates are low, money's harder to come by. People aren't buying. When interest rates are high, and it's harder to make things work. So keep that in mind. Just because things might look rosy or not so rosy, I'd say just keep looking at deals, keep moving, keep doing action, and then you will move forward. So my takeaways are, we've been doing fairly well so far compared to previous years, into previous winters, but now moving into spring, this is the prime time to get appreciation and to get properties on the market and sold. So I'm really curious to see what's going to be going on, what the buyer sentiment is going to be, what the seller sentiment is going to be. Interest rates continue to be the biggest question mark, as always, it seems like. So I think they're going to be in the mid to low sixes for the remainder of the year. And I think that's not a bad place to be. I would like them to be closer to like the mid to upper fives, but we're getting closer. It really depends on where the economy is going. And then lastly, I got to reiterate this, but buy when it's right for you. Don't try to time the market. That never, ever, ever works. There's so many different nuances. Just try to find a good deal and a good deal for you. There's no one good deal for everybody. For example, I like properties with dishwashers and with little areas for storage and all sorts of these other components that might not mean as much to somebody else. But what are your thoughts? What do you agree with? What do you disagree with? I would love to hear your comments. Either email me, text me, call me directly, put it in the comments down below, and I would love to chat about it even more. All right, so if you want to grab coffee, if you want to talk more, if you want to buy or sell, I am all ears. And again, I love investors, so let's talk investing. All right, talk to you soon.